there are plenty of stocks that move against the market. And it's very much the same in crypto. And so this was the thing is somebody asked me the question, the crypto market is getting hammered. I was like, well, there are a lot that are well off their 2021 highs. But I could run through a list of, a half dozen at least that I've seen in the last 6 months up like 5, 6, 700%, 1,000%. And so it's like, welcome to the Exponential Investor podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Hi, and welcome back to another episode of Exponential Investor. I am your host today, Shae Russell, and joining me is Sam Volkering, your other co-editor of Exponential Investor. Sam, how was your break last week, mate?
It was fantastic. You seem a lot more invigorated than me right now. My boys are still struggling to adjust. It was only a 2-hour time difference from here to Greece, but my boys are struggling to readjust back to it, and there's been a few 4:30 and 5 o'clock in the morning wake ups since we've been back. So I feel like I've been up for the whole day already. So if you find me yawning at all during our conversation, don't take it personally.
All right, I'll do our best. Look, I'll just let you know I'm a little over-caffeinated today. Rather than having food, I decided to have coffee all throughout the day. So that's probably what's driving my enthusiasm.
That's my strategy today as well.
All right, Sam, we're going to kick things off today. Just before we started today, we had a little bit of a pre-chat, like what are we going to talk about? And both of us sort of looked at each other and went, oh my God, what is going on in the markets right now? Yeah. So I'm going to throw over to you. So before I throw to you, actually, I'm going to preface this with a couple of things. It's pretty brutal in the US stock market. So I had a look today since last week of March, it's down about 14%. It's not too bad in the FTSE. That's down about 7 to 8% from the same time period. But what the heck is going on in crypto? And my follow-up question to this is it a buy the dip opportunity, or is it really, cash out and run?
It's interesting. I was writing some answers to some questions for Southbank Investment Daily this morning, and I was thinking about this idea of the markets. The markets are down. The markets are crashing, and I don't really like the idea. I mean, we do talk about it, and we write about the markets and stuff. I don't really like the idea of talking about everything in such a general, broad brush, because like you say, like the market's down, or like the Nasdaq's down like 14% or something, or whatever. The FTSE's down 7, whatever. I'm somewhat not bothered by any of that. What's interesting, or what I like to look at, is the pockets of the market which are moving, at different levels. So obviously, tech in the US hammered. Anything that is either pre-revenue or loss-making, growth stocks hammered. And even some of the the big profit making, dividend paying stocks hammered, but not so much, not as hammered. And so you kind of look at the markets and think, oh no, it's all absolute. I won't swear too much actually on this show. I'll think of a better term for what I was going to say. I can't think of another term. It's not good. Okay, let's run with that. And it's not good, but there are plenty of stocks that move against the market, and it's very much the same in crypto. And so this was the thing is somebody asked me the question, the crypto market is getting hammered. I was like, well, there are a lot that are well off their 2021 highs. But I could run through a list of, a half dozen at least that I've seen in the last 6 months up like 5, 6, 700%, 1,000%. And so it's like, you don't really get that kind of discrepancy in the stock market. You do get some stocks moving against the trend. and periods like this, I love, and you've known me long enough that I love periods like this, because if you have got the confidence and conviction to be a stock picker or a crypto picker, whatever, an investment picker, and you go into the granular detail of the market, and you can find stocks that are or crypto that are doing something, moving forward, progressing, innovating, developing, doing deals, getting stuff done. All I see is just a whole bunch of great opportunities trading at discounts because the market has proverbially packed its stacks, I suppose is the PC phrase to use. So I love it. Yeah, for me, it's buy the dip, stocks, crypto. I've put money into the market over the last couple of weeks for that reason, be it in crypto, be it in the stock market. There are just a whole bunch of opportunities that I think, if you're a long-term investor, and by long-term, I'm really only talking at least sort of 3 to 5 years. I mean, my strategy is different for everyone's and might be a bit longer, but if you're looking at those sorts of time frames and beyond, I kind of love this right now.
I think that's an excellent point. It's buy the dip, but it's not just buy the dip blindly. Like, you're not throwing darts on a board and hoping you hit something, or at least that's how I play darts. Maybe there's another strategy to it.
My dart throws like this.
But it's about looking for companies and cryptos that are doing great things in the space and that have the opportunity to ride out bad times.
Yeah, absolutely. And you know it as well. I mean, we both keep an eye on all the markets. All the markets. And the ASX is... So I've always loved the Australian stock market too, right? Because it's the kind of market where you've got these giants of industry, and there are some, BHP, had a dual listing, and it's Rio. Some of the big miners have got strong bases here in the UK. There's a lot of sort of cross border kind of opportunities there. But anyway, it's also jam packed with all these tiny little explosive potential kind of tech companies as well that they, and again, so in the US, the last couple of years, the whole thing around SPAC investing has been a big thing where these big cash kind of holding companies that are listed go and find a target and they do a reverse merger and they go and list on the stock. That kind of thing's been happening on the Australian Stock Exchange forever, so as long as I can remember. These tiny little shell companies with a bunch of cash do a reverse merger with like a tech company. All of a sudden you've got this new tech stock. I mean, some of the best stocks on the ASX over the last decade have come from reverse mergers.
We like to call them backdoor listings.
Yeah, backdoor listings. However you want to call it. I mean, called the market. But that's why I think in periods like this, right, people get too caught up in all the negativity because, you can explain what it's like down under, but here it's inflation's screwing the economy. The cost, it's a cost of living crisis. Your energy is soaring, and it's all true, right? And the war in Ukraine, and it's just, everything's just heavy. It feels like the world is heavy right now. The markets are heavy, but when you pick through the granular detail of what's actually happening in a lot of places, it's not as bad, and you've kind of got to buck that negativity trend to really see that I think these are the periods where people really make bank, right? If you've got the conviction and you've got what I call the intestinal fortitude to enjoy this kind of volatility, I think this is where you really set yourself up, and that's in the stock market, and that's definitely in the crypto market where Brian Dintz, who very well, we've both worked with in Australia. He retweeted something I saw the other day. It's the Bitcoin fear and greed index, and it's this index where it goes from like extreme fear to extreme greed. I'm sure there's one for the stock market as well, and it had two images of the fear and greed index, and both of them were when Bitcoin was at $38,000. One was $38,000 in 2021, and one was $38,000 in 2022. And the interesting thing is the exact same value of Bitcoin. But in 2021, the fear and greed index was extreme greed. And in 2022, it was extreme fear. So same price and two completely different investor sentiments. And I think that's where people just get caught up, is in the psychology of investing, getting stuck with the crowds, this idea of following the crowds. You've just got to drop all that, because that only gets you into that sits you at the peak of the bell curve, and you don't want to be at the peak of the bell curve. You want to be an outlier. You want to be sitting on the fringes. That's where the really big, I think, opportunities come from.
Look, I completely agree with that, especially when you're talking about the psychology of it all and the markets. And that was sort of really drilled home, the markets. I hope people are watching this with video to see that we're making fools of ourselves publicly as well. So I was at an Australian mining conference last week, and it was basically chock-a-block full of explorers, essentially all looking for a buck and all looking for money to invest in them. And one of my big takeaways from that is there was a lot of money in that room looking for a home. And by money, I mean big money. I'm talking about private equity and brokers and hedge funds that are looking to invest many millions of dollars in these tiny explorers that can't rub 2 cents together to get them to the next phase. And this is, I think my key takeaway from today is it's not so much about buy the dip, but it just took me a minute to find my point. It's about thinking like big money. So they're not looking at the markets in the short term. They're looking at the structural, the structural problems in the underlying commodities market. And that is essentially that we don't have enough of what we need going forward. And they're all cash rich, and they're cash rich because they cashed out along the way as the markets rose. And now they're not pulling out of the market. They are looking for the next project to put that money into. So there were some fantastic copper companies, none of which I can name here. I just need to be very clear about that. But there were some fantastic copper companies, gold companies, and tin companies that are all going to end up with substantial investments in the next couple of months. And it goes to show that companies that have got great deposits and companies that have got great management team are going to attract that big money. But we can extrapolate from there and apply that to great tech stocks, great crypto projects. My knowledge is pretty limited on that, but those same principles apply. Great projects are still going to get off the ground because big money's going to want to invest in them. And that's really what the takeaway needs to be for the average retail investor. It's not the markets. It is, as you pointed out, think long term. Think about what's 3 to 5 years ahead.
Yeah, absolutely. And what's interesting is that in the first quarter of 2022, there's been more venture capital flow into crypto than any other period ever before. So I think that the numbers were 28 billion or something of VC money entered the space in 2021. And that was when we were hitting all-time highs across the board in early-ish 2021 and later around November 2021. The first quarter of 2022, when prices have been heading south, has seen more capital investment from big money than ever before. The investors don't get told that when they're covering the price of Bitcoin on the news or whatever, because they don't know that. They don't know that stuff. Because why would they? Because they're stupid and they're superficial. Their depth of knowledge of this is all puddle deep. So when you look at where the real money is actually moving, it's moving into the opportunities of tomorrow still. Because you're exactly right. The money that was made over the last decade, 20 years, is still there. If you even look at the stock market, there are some big companies like trading at values they haven't seen for 5 or 6 years. There's still a lot that are only sort of trading at values maybe from late 2020. So there's still a lot of that money still exists. A lot of those gains that have come is still there. And even, clipping out some now to reallocate. I think we're seeing a significant reallocation of capital in the markets. Like you say, it's money looking for the next opportunity, for the next wave, for the next cycle. And, you will get bombarded, and I get bombarded with it every day, that this is, this is 1920s all over again, and it's going to eradicate, 20 years of prosperity and gains, and the market's going to crash lower than it was in, March 2009. It's like, no, I don't see any of that happening. It's just, it's a different world. Okay, there are issues, there are systemic issues with, sovereign debt and money printing and inflation and all those sorts of things, which we foresaw. We've been telling our readers about this for a very long time, since 2020. As soon as they started all this stimulus out the back of the COVID stuff in 2020, we said inflation is going to come, because it can't not come when you pump the economy full of that money. So there's issues with that, but having said that, if that also can be somewhat beneficial if you're an asset owner, but again, sort of bigger conversation. The point is that I think there are more opportunities out there now than we've probably ever seen. That when you find heat comes out the market like this, it's a bit of a shakeout in crypto, for instance. People are like, oh, well, this is it. This is the bear market. This is the crypto winter. It's going to last for 2 or 3 years.
The crypto winter.
Maybe. If it does, that's okay, because every crypto winter we've seen previously has led to better things and higher highs and better development. It shook out the garbage. And if that's the case again, then that's okay with a longer term mindset, which I've always had in this market. And realistically, we've not even reached my first sort of 10-year period of really writing to people about this. So, I think it's just one of those things we've got to enjoy and see the opportunity for.
You actually make an excellent point there, Sam, and I just want to slip back to something that's probably a little bit more in your wheelhouse than mine, and that's the tech boom of the 2000s, or it really started in the late 90s. Now, you're talking about really high valuations there that some companies are seeing at the moment, but we saw something very similar happen in the late 90s, and eventually when the tech bust happened, it essentially washed out all the dud companies. Now, that might not necessarily be what's happening now, but what it did leave, what those dud companies did allow the markets, was they showed us what a good tech company is versus what a bad tech company is. And that's why, not market crashes, because I'm still of the view that it's of a correction, like now, are quite powerful, because it shows companies that have the mettle to stand to withstand these type of corrections.
Yeah, it's exactly. I think that's sort of exactly what happens in the crypto market as well. Is that, and again, I'm reluctant to call it a crash, albeit that's what's trending on Twitter. But I don't see it as necessarily a bad thing. I think if you find the right opportunities, and look, there's a handful at the moment. There's some in particular, I think, that have that kind of, again, I don't want to liken it too much to what happened in the late 90s and early 2000s, because it's not of that severity. And I don't see that what's happening now, especially in crypto, right, as being the same as what we kind of had in 2018 and 2019. Nonetheless, it does shake out a bit of the garbage, and it really, I think it's going to unlock a lot of that really big potential in the market, because, like we said, the big money is moving, and it's moving a lot now when you wouldn't expect it to. So that's saying to me that these bigger institutions and these well-funded, funds and family offices, whatever it is that's put, shifting this money, VCs, all that sort of thing, is it's moving now to position itself for that leg up. And that's the kind of thing we've been writing and talking about now for some time. It's not about BlackRock, deciding that they're going to let investors invest into 401ks or whatever, or Fidelity, sorry. It's not about those institutions that really triggers that really big next run of capital creation and wealth creation. It's the money that you don't, it's the funds and the VCs that you don't hear of, that you don't know about, that are more nimble and can mobilize hundreds of millions of dollars into opportunities very quickly. And they're making their moves now. And that, for me, is very telling. When you look at it, particularly in crypto markets, of some of the things that are coming, there's a big upgrade coming to Ethereum. There's a lot of activity happening with Bitcoin. And then outside of that, there's so much else happening around the decentralization of everything from data and privacy to information, social networks, gaming, finance. There's just so many different facets to it that the money is starting to move into these for that next hockey stick inflection point. And I think we're yet to see it properly really get its mojo. And I think now positioning in the right ones in the right way, I think that's now is the time to make those moves.
Awesome. Sam, we have talked on far too long, but that's actually a great place to leave today's chat. So we will close out today's chat, and I look forward to you joining me next week. And to quote you, thanks for watching, and bye for now.